A black swan moment for big tech. 30 minutes until the official start of trading. I'm Katie Greifeld.
And I'm David Gura. Matt Miller and Sonali Basak are off today. Bloomberg Open Interest starts right now.
Coming up, risk-off sentiment sweeps across market stocks, plunging this morning as that buzz around Chinese AI startup DeepSeek shakes up Silicon Valley. And as such, the stakes are high for the Magnificent Seven. DeepSeek's lower-cost AI model casting doubt on those sky-high valuations ahead of a heavy earnings week. But beyond tech, investors are also contending with Trump's latest trade moves and that next Fed decision due out on Wednesday. All of that and more coming up. But let's see just how ugly it is in our markets this morning, because right now you have the NASDAQ 100. We're taking a look at futures here, down about 3.5%. We had been down by more than 4% earlier. You do have NVIDIA down by about double digits right now, so that is weighing in a big way on the benchmark. What I'm excited to get to, though, is why this is showing up in the bond market. You have 10-year Treasury yields currently down by about 9 basis points. Investors clearly is seeking a haven here and finding it in the U.S. Treasury market, all as volatility comes back into the equity market. You take a look at the VIX right now, trading with a 21 handle, David Gura. We haven't seen that in a while.
Haven't seen it in a while, and I'm looking here at individual stocks. Chip-related stocks, NVIDIA and ASML, are leading today's plunge as DeepSeek's lower-cost AI model, which you mentioned, casts doubt on those sky-high tech valuations. Today's sell-off comes ahead of a spate of big tech earnings this week. Several members of the Magnificent Seven are reporting, including Microsoft, Meta, Apple, and Tesla. You're eagerly awaiting those results, of course, but earnings week is underway in earnest already. SoFi reporting guidance that fell short of expectations. Meanwhile, one bright spot this morning is AT&T. That stock is up on an earnings beat.
Yeah, managing to fight into the green. You also saw Apple briefly turn positive. Of course, we know Apple reports later this week, but all of the attention right now, all of the mind share is on what's going on in the AI supply chain. Of course, DeepSeek really rattling, it feels like, every part of that supply chain, from Meta and sort of the users of AI with their own chatbots, and also the likes of NVIDIA. The question being, are we massively overspending here? So two things, David Gura.
Yes.
One, it's nice to see you.
Great to see you as well, Katie.
Number two is I learned what a Sputnik moment is this morning.
Wikipedia.
Wikipedia, after a text from my father that fear about the perceived tech gap between the Soviet Union and the U.S. in the 1950s. You have to wonder if we're entering into a modern-day Sputnik moment right now.
Yeah, I think that the psychology of this is so interesting and was so manifest over the course of the weekend, into this morning as well, this fear that maybe we weren't paying close enough attention to what China was doing, what was happening halfway around the world.
Did you know what DeepSeek was?
I did read Joe Weisenthal's newsletter last week and had an inkling of it, but kind of saw it as something, you know, that Joe was interested in, maybe I should pay attention to in a few weeks' time.
All right,
I was caught unawares.
Check out Odd Lots, because apparently they had the scoop. Let's talk about it, though. The DeepSeek drop, rattling tech stocks this morning. Let's get right to Mandeep Singh of Bloomberg Intelligence. Mandeep, I know that you knew what DeepSeek is, but sort of just set the scene for us here. What exactly is this new chatbot that we're talking about, and what does this mean for the current AI supply chain?
I mean, it's very similar to your ChatGPT. Really, ditto. You could go on ChatGPT or you could go on DeepSeek, start asking questions. So really, I think the reason why people are talking about it is really because of the cost. But I go back to when Meta open sourced their Llama model. That, to me, was the pivotal moment where everyone could build a foundational model because Meta had open sourced the weights. And in this case, DeepSeek showed a nuanced approach in terms of bringing down the price when it comes to, you know, per query pricing, which is what everyone has been talking about around scaling laws and how do you scale this. Well, they showed it can be scaled at a much more efficient way, and I think that's why there is so much kind of focus right now. But that inflection moment had to come sometime. It came from their paper because the paper is very detailed.
Get back to the psychology we were talking about here a moment ago. I think the fear is that this thesis or this narrative that so many people had bought into might have some holes in it or some problems with it. How rational is that fear as you think about the way that the market is reacting so far?
Well, so look at the biggest spenders of CapEx. It's your hyperscale guys who are both training as well as using the same compute for inferencing. Now, if the training can be done at a much lower price, well, guess what? They can deploy that same compute for inferencing. And that should show up in Microsoft's inferencing revenue when they report this week, as well as Google and Amazon. So to me, the things are still done on GPU. It's not as if we have found a new architecture and you move away from a GPU to an ASIC or a CPU. It's still GPUs. It's how do you make the most efficient use of those GPUs? And guess what? The hyperscalers will leverage, some of the advancements that are shown in this paper. So to me, that's a positive sign for the cloud revenue that'll be reported by the hyperscalers this week.
Well, it is funny and probably lucky that this does come, this little moment of panic before a big tech earnings week. And that's where I want to go, because one of the fears that's percolating through the markets right now is, has the U.S. just been massively overspending on AI? Can we answer that question right now?
Yeah, I mean, we have never seen, companies like Microsoft spending $80 billion on CapEx in a year.
Meta.
Meta. They raised their CapEx last Friday, and Project Stargate coming to the scene, additional buyer of $100 billion in chips. So clearly, we are talking big numbers here, and there is a pull forward component in the sense there will be a digestion phase. Now, whether this is the moment where digestion happens in 2026, I don't think these companies are going to change their CapEx plans for this year, but clearly we are at a risk where companies may say, oh, we have enough capacity. But when I look at TSMC, they keep saying we're still short on capacity. So I don't think when you tie, all the data points that we are getting from these companies, TSMC is still supply constrained. So that means we don't have enough GPUs in the world, even if DeepSeek is quite efficient. And that's where I think we still have some runway, but clearly we will have a digestion phase at some point.
All right, Mandeep, so appreciate you. I know you're a very busy, very popular man this morning, so we'll let you go. That, of course, is Mandeep Singh of Bloomberg Intelligence. And let's broaden out this conversation now, because joining us at the desk, we have Jack Manley. He is JPMorgan Investment Management Global Market Strategist. Jack, I won't ask you if you knew what DeepSeek was before this morning, but let's go back to tech earnings. Again, really convenient that we're going to hear from a lot of these companies. How do you think this changes the conversation on this week's earnings calls?
Well, I think it's all about, how do we justify all of this money that we've been throwing at this problem that evidently you can solve for a whole lot less? I mean, we don't necessarily have full proof of that statement, but at least for where we are right now, clearly markets are a little bit jittery. So I would say that's the big story, right? I mean, but it's also a great reminder, I think, for investors right now, how vulnerable the stock market is in total because of its reliance on the Magnificent Seven, who are in turn extraordinarily vulnerable, not just because of the valuation environment. I know that's something that we're talking about a lot, but also because of what's going on with interest rates, right? And good time to talk about that,
Sure.
given the Fed. The other kind of complicating factor in here, and I think this is sort of interesting, is that one of the few areas in Congress, and this is maybe opening up Pandora's box here, talking about politics, but one of the few areas in Congress where there actually is bipartisan cooperation is this idea of being tough on China. And that toughness on China has been reflected in export bans of key technology, including some of the technology that we use here in the States to develop AI supremacy. Evidently, that's not working so well, right? If China is still able to develop these chips using or develop this technology using what may be considered inferior chips. So it's not just earnings, right? It's the valuation story, it's rates, it's a reminder that policy is going to be front and center this year. It's all this stuff kind of swirling around while the S&P 500 is notching all-time highs.
What does it tell you about where we are in this story? I think we're all familiar with kind of the genesis of ChatGPT. That took many years to get to a point at which it could be deployed to the public. Here we have this coming together in a year's time. Where are we in kind of the broader narrative about AI and wider adoption, which I assume you would say would lead to kind of a broadening of the market rally that we've seen thus far?
So I would say right now where we are is probably a wait-and-see moment. I think we're probably going to take a breath and acknowledge valuations, acknowledge that the trajectory of interest rates may be a little bit different than we would have otherwise expected a few months ago. Acknowledge, again, that policy is going to be very important. But I'm a glass-half-full kind of guy, and this, to me, is actually a very interesting opportunity. Because the big story for 2025, as we move into 2026, was this idea of a broadening out of earnings, which in turn would lead to a broadening out of participation, right? Where it's not just the Mag 7, it's the S&P 500 as an index. Now, some of that story hinges on this idea that the S&P 493, I like to call them, can actually start to pull their own weight, can actually start to do something. But part of it also hinges on this idea that the luster kind of wears off on the Magnificent Seven, that investors have a reason to start looking somewhere else. And maybe this headline this morning is that catalyst that jumpstarts this broadening out of performance that everybody's so excited about.
Well, where investors are looking right now is the bond market. And this is a circle I'm hoping you can help square. Why are 10-year yields down 9 basis points right now? What is the line that you can draw between what's going on, of course, with DeepSeek into the U.S. Treasury market?
I mean, now I'm guessing right now.
We could put it into DeepSeek.
Yeah, we should type it in and see what it has to say.
Test it out, yeah.
I mean, you know, it's interest in purchasing treasuries, right? And why would you be buying treasuries? Because you're worried about what's going on at a geopolitical level, perhaps. And maybe we're back to having a policy discussion. You know, I didn't know what DeepSeek was. I could have guessed what a Sputnik moment was. And, you know, if we are indeed in this kind of Cold War, at least from a technology perspective with China, and we have a new administration in Washington, there is a lot of attention being paid to policy volatility. So I think that's another thing in here that we have to
Jack,
consider.
since you brought up Washington twice, by my count, let me ask you what you've learned over the course of this last week with Donald Trump back in office, just about the interplay between policy pronouncements and proposals and the way that investors, markets are reacting to what this second-term president is saying.
What I've learned is that markets are desperate for clarity on what policy is going to look like, and they're leaping to conclusions which translate into outsized volatility in capital markets. I would much rather understand what's going on and then plan for it as opposed to speculate. So I'm almost sitting a lot of this policy conversation out on the sidelines, despite the fact that I brought up Washington twice in the last 5 minutes.
All right, Jack, we got to leave it there. Great to have you with us on a very busy morning. That, of course, is Jack Manley of JPMorgan Investment Management. Meanwhile, quick look on these markets. We still have 20 minutes until the bells ring, but you can see investors getting a start early, selling down big tech stocks. The S&P 500 down about 2% right now. As I said, a lot of that pain is concentrated in the NASDAQ 100, off by about 3.6%. You do have yields lower on the day. That is relative good news for the small caps, and you can see that in the relative performance right now. The Russell 2000 still down, but only by about 1%. Now, coming up, we'll continue that conversation on DeepSeek with CJ Muse. He is Cantor Fitzgerald, semiconductor analyst. He joins us next. This is Bloomberg.
Now to high interest, a look at what's making headlines around the world. We'll start with the latest on the wildfires in Los Angeles. The region is getting its first rainfall in months. That's posing a new risk of landslides. Right now, a flood watch is in effect for Los Angeles County, and several roads are closed due to mud flows. The Palisades fire is now about 90% contained, while the Eaton fire that destroyed much of Altadena is 98% under control. U.S. Steel is facing a proxy fight. Activist investor Ancora wants to replace the company's current CEO and has nominated 9 candidates for the company's board in a push to abandon the attempted takeover by Nippon Steel. Bloomberg sources reveal that Ancora will push for an end to the litigation attempting to rescue the deal and instead collect a $565 million breakup fee. And Donald Trump caused a whipsaw in markets over the weekend after threatening a tariff on Colombia. The Colombian peso slumped on the news that extensive tariffs would be imposed due to a dispute over deportees. Colombia played ball with Trump and agreed to a deal, narrowly avoiding the economic penalty Trump had threatened. Katie.
Well, let's get back to those markets right now and the sell-off that is underway. NVIDIA leading the charge right now, down about 12% before the opening bell. Here with more on what DeepSeek means for the U.S. AI industry is Cantor Fitzgerald semiconductor analyst CJ Muse. He has a 200 price target on NVIDIA, and I'm so glad you could join us on such short notice because I'm taking a look at the first line of your notes. You write that DeepSeek V3 is actually very bullish for compute and for NVIDIA. Feels like this market needs some silver linings here. So what is that silver lining?
Yeah, good morning. So, I think one of the important takeaways from DeepSeek, given their constraints in terms of GPU availability, though clearly I think what they've announced doesn't include really the full portfolio of GPUs that they had access to, given how, if they were to publicly announce it, it would go against kind of the embargo. But, they came with some very interesting training techniques, greater optimization that, has enabled a very robust model. And I think all the other large language model providers will be adopting these techniques. And really, if you take a step back, their announcement basically tells us we're closer to AGI, artificial general intelligence, not further away. And in that sense, that's very bullish for Jevons paradox, the ubiquity of AI, and therefore, the true demand for compute to support that.
I'm curious, the refrain that we keep hearing is this company was able to basically replicate OpenAI on just a handful of $1 million in a very short period of time. And I would love for you to sort of correct that if it needs to be corrected. Sort of what are we looking at here in comparison to what Meta's devised and what OpenAI has made?
From their comments, they're essentially spent 1/100th of Meta Llama 3.1. It is rumored that they have 50,000 Hopper GPUs, and if that's the case, then they've spent significantly more than that kind of discussed 5 million plus. So I'm not sure I believe those numbers. I think they've spent many more dollars. I also don't think that they've included some of the R&D spend in that figure. But to be clear, the model is very interesting, and I think that it really speaks to, again, taking a step back. We need to improve the cost of compute 1 millionfold to get to AGI, and this is one more step in that kind of path that we're on. And so I view it as incredibly bullish. If you think about what they've done, how will OpenAI, Meta, others kind of respond? Well, they're going to take these optimization techniques, they're going to apply them to their large clusters. They're not going to slow down spending. They're going to accelerate spending because it's existential, and they all want to win. And so I view this, as no change to CapEx announcements. We're going to hear from Meta, Microsoft, Tesla this week, and in fact, I think it will only speed up their desire to invest and try to win, this AI kind of battle that we're in.
Well, you mentioned, of course, the earnings calls we have up, and I hear what you're saying, the bullish case that you're painting for NVIDIA and some of the other names in the supply chain. But even still, I mean, what do you think that these executives, what do these companies need to say this week to reassure investors? Because right now it looks like a sell everything moment, CJ.
Yeah, no, I mean, to be fair, specific to NVIDIA, this is one of the most widely owned names in the market. We're going to get a small beat and raise when they report a month from now. And so obviously there's a lot of nervousness. And I think the truth behind the nervousness is that, CapEx budgets will not change in 25. It's going to be robust. But the worry is that 26 will not be a growth year. And if in fact, we look at DeepSeek and say, you know what, we're going to focus more on efficiencies and ROI in 26, then you could argue that maybe the level of CapEx spend growth in 26, all else equal, will be less. And that's what's driving the skittishness. And so, taking a pause here and pulling back is very understandable because there is greater uncertainty today. And AI is the most heavily owned part of my world in semiconductors. So I get the skittishness. I would just, advise taking a step back, thinking through what we actually heard. And I would argue a month ago, we were, worried about NVIDIA that scaling laws were slowing, and that's negative for NVIDIA. Now the market's saying scaling is accelerating. Well, that's negative for NVIDIA. You can't have it both ways. So I think as the market truly digests the news, we'll realize this is not a truly negative event. But, I think to the earlier comment, from your prior speaker around uncertainty, DeepSeek adds uncertainty to the market. And obviously, given the heightened valuations, it's a negative today for sure.
CJ, let me ask you lastly just about this kind of geographic binary. And I think when you look at investor skittishness, some of that is attributed to the fact that people were caught blindsided by what advancements a Chinese company had made here. And I wonder how you think about that, our kind of ability to understand or stay abreast of the advances that have been happening in China in this environment where there is clearly such a kind of competitive layer to AI in particular. Well,
I think that China understands how important AI is to their economy. just like the United States. So, it is going to be a fierce battle. It's one that, I think we in the United States can win. But, let's not lose sight of the fact that, China has, very talented engineers. They can put significant dollars behind it. So, it's not going to be easy. But, I would never bet against the engineers we have in the United States as well.
On short notice and with great insight, CJ Muse of Cantor Fitzgerald. CJ, thank you very much for the time. And coming up here later this hour, we speak to Manish Kabra of Societe Generale, who weighs in on the potential threat from DeepSeek. That's coming up. This is Bloomberg.
All right, welcome back to Open Interest. After a really powerful week last week, you're now looking at a big sell-off, and it's all about DeepSeek and this AI supply chain. The S&P 500 off by about 2.2% right now. A lot of that pain is in the big tech space. The NASDAQ 100 down about 3.6%. And we should show NVIDIA because that is where all the action is this morning. NVIDIA shares currently off by about 12% right now. Of course, this is sort of the black swan moment that people who are worried about valuations have probably been looking for as an excuse to sell.
Absolutely, and I think about kind of the juxtaposition between the news that we got over this weekend into this morning with what we saw unfolding in Washington last week, all of the enthusiasm for more compute and more data centers and more infrastructure spending when it comes to AI in Texas. So a stark contrast, I think. Yeah,
of course, all the fanfare over that big JV they announced with that $100 billion spend coming up. That powered tech stocks last week, but now the question is, are we massively overspending here? What are we actually getting for our investment? But we'll try to answer those questions coming up. Less than 4 minutes until the opening bell. Katerina Simonetti joins us of Morgan Stanley Private Wealth Management. That conversation up next. This is Bloomberg. All right, we are moments away from the start of trading on what's pointing to be a pretty brutal start to the week. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. There was so much euphoria last week. Of course, the best starting week for the S&P 500 for a new president since 1985. For this morning, that feels like a distant memory. We're talking about AI. We're talking specifically about Chinese startup DeepSeek and those lower-cost AI models sending a bunch of panic through the AI supply chain and the broader markets right now. You could absolutely see that in the pre-market. You're going to see that in just a couple seconds. But in any case, you do have those opening companies ringing the bell. There's still some enthusiasm to be found, but not on this board to my left right here. The S&P 500 down by about 2.3% right now. And as we've been saying, the pain concentrated in big tech, that is. The NASDAQ 100 off by about 3.5%. Think chips, of course, but also think a lot of those big tech companies that are going to report this week, such as Meta, such as Microsoft. Your relative safe haven on the day is, of course, those small caps. The Russell 2000 only off by about 1% right now. You do have the bond market coming in, investors seeking safety in longer duration treasuries. That's good news for the Russell 2000, but couldn't even escape the pain today. Meanwhile, let's get back to those chip stocks, though, because NVIDIA ASML plunging as DeepSeek's lower-cost AI model casts doubt on those sky-high valuations. Traders clearly looking for an excuse to sell right now. NVIDIA down about 13%. ASML currently off by about 7.5%. David Gura, it's ugly.
It's ugly. You mentioned those big stocks, Magnificent Seven. I thought we were going to come in here today just talking a bit about earnings in a kind of
surprise,
not bland, but regular way. Let's take a look at those Mag 7 stocks. Microsoft, Meta, Apple, and Tesla all set to report results later this week. The stakes are high, as we heard. There's going to be an eagerness to hear sort of them respond to the news that we've seen here over the weekend. We're eagerly awaiting the results of those companies, of course, but earnings week underway already in earnest. SoFi reporting guidance that fell short of expectations. Meanwhile, one bright spot this morning is AT&T. That stock is up on an earnings beat. I want to get back to that top story now. DeepSeek shaking up global tech. Bloomberg Technology co-host Caroline Hyde joins us now for a closer look. And Caroline, I will not ask you the litmus question we've been asking every guest. That is, had you heard of this company before? But I am curious sort of how you see this fitting into this broader narrative about kind of the nascent evolution here of AI.
It puts to question, do you need ever more compute? Do you need ever more $500 billion announcements coming from SoftBank and Oracle and OpenAI for that amount of compute power if you can start to make large language models far more efficiently, far more cost effectively? But there is a big but. This is open source versus closed source. We've been having this argument since the beginning of Meta announcing Llama versus OpenAI trying to still say it's only really with its own ChatGPTs and its own large language models that the future can be clear. And actually, Bloomberg Intelligence already saying, yes, this is going to make it clear that you can do more with less. And that expression that, of course, openly we're going to see innovation being the side effect of the fact that we've had China being put against, being limited in terms of its ability to be getting these chips from NVIDIA and the like. But Bloomberg Intelligence saying Microsoft, AWS, Oracle, unlikely to be cutting back their capital expenditure because, look, private enterprise need closed models. They need to be able to iterate privately. They're going to still need access to cloud. What's interesting, though, the #1 downloaded app on Apple today is that of DeepSeek. Can you get on it? No, they need more cloud compute. They need more overall access to data centers right now.
DeepSeek, RedNote, all the Chinese apps that are popular right now among U.S. consumers. I want to talk about the lower cost portion of this, though. Do you get the sense that this is going to spur a race to the bottom when it comes to cost? Because that seems to be what's really rattling a lot of the big names that we've been speaking about.
And I think already you've been getting there to a large extent. You've already been seeing that OpenAI have been trying to make clear that this is a cheaper and cheaper offering. Whether or not they're subsidizing it, whether or not they're able to be thinking about more energy efficiency and beginning to get, therefore, more cost-effective and cost-efficient use of their own compute power. But this ultimately does show that you have to innovate to be able to make things more and more accessible. Look, this is free to use, the model. It is open to use. And indeed, the APIs, which you can put within your own offerings, your own chatbots, is really, really cheap in comparison to that of OpenAI. So yes, you are going to have this innovation that suddenly means that you're going to be quicker, cheaper, more cost-effective for many. But I think ultimately we're going to be questioning whether or not we should be seeing a $65 billion announcement coming from Meta into data centers. What we loved on Friday, we hate on Monday. Yes. But it is also, though, that Llama is an open source offering. Yeah. Already Meta has been trying to make the argument that when you bring developers together in an open source manner, you're able to innovate that much faster. Bloomberg Intelligence has said for ages that this DeepSeek is a critical large language model provider. It is the 7th best, they thought, in the world, and that was June of last year. They already think China is only about 4 months behind the United States in terms of large language model innovation. That's how they really compared, perhaps, text to image generation. They thought that China was about 4 months behind when it came to competing against Sora, for example. This shouldn't be as big a black swan as it currently is, but it seems as though suddenly we've all woken up overnight and thought, goodness, China's really rather good at this, even if we do limit our NVIDIA chips to it.
Well, my takeaway here is that we all need to be reading more Bloomberg Intelligence, apparently collectively on Wall Street as well. Caroline, I know you have a huge Bloomberg Technology show prep for today. That, of course, is Caroline Hyde. She is co-host of Bloomberg Technology. And coming up on that program, former White House Chief Information Officer Teresa Payton will join the program. But stay with us now. Let's bring this back to the markets because joining us is Katerina Simonetti. She is Morgan Stanley Private Wealth Management Advisor and Senior Portfolio Manager. Great to have you with us on a very big day in markets, heading into really the heart of earnings season, Katerina. If you think about the last couple quarters, there's been a real scrutiny on how much big tech is spending on AI, on CapEx, how much they're devoting to these technologies. I have to imagine that question just became more urgent.
Absolutely, Katie. Thank you for having me on the show today, out of all days, because decline in tech stocks today can be really attributed to 2 main factors. One is high valuations and 2 is high portfolio concentrations. As investors are so driven by this fear of missing out and missing the wave and missing this technological revolution that is definitely upon us, we keep emphasizing that this change takes time. Technology is not perfect. It's not going to inevitably, immediately lead to the efficiency, productivity, and lower costs. These things are going to take time, to develop. And therefore, we need to be patient. And there is ever if there has ever been an argument for maximum portfolio diversification, this argument is now. Technology is extremely important within the portfolio. It's going to be important going forward, and all these things are going to, eventually play out. But costs are major, and not just the costs of operation and cost of energy and data centers and operating AI, but also we are in the high interest rate environment, and the Fed action is going to play a big role here.
Katerina, we've heard so much about the need for this market to broaden, this hunger for more breadth, and I guess this could be kind of an unexpected, perhaps unwanted catalyst for that to happen. But I wonder if we could kind of look at the catalyst such that it is. I'm curious what it tells you just about the state of the promise of AI. We have banked and put so much faith in this being the future of technology more broadly. Is this cold water to some degree? How do you look at sort of what we've learned here in recent hours?
Well, it's important to remember that we're in this for the long run. And the fact that AI is going to be a catalyst and a game changer, both in financial services, in healthcare, in manufacturing, like really every aspect of our lives, is undoubtable. We absolutely have to be present. We have to be invested in tech and AI. But should we be concentrated in these areas to the extent that majority of the portfolios are following the returns of 23, following the returns of 24? Absolutely not. Rebalancing plays a role. And we also can't forget that the market leadership is ever changing. If we look back at performance of last year, the best performing sector was actually financials, not technology. And investors are starting to realize that being in sectors such as energy, utilities, materials, financials is extremely important for the total performance of their portfolios. And this tech concentration needs to be rebalanced and reduced. And that's what we're seeing in the trading pattern right now, days like today.
Well, Sonali Basak is smiling somewhere in Miami with that financials mention, because that has kind of been the underappreciated leader of this market. I want to talk about healthcare, though, because you think about healthcare, it's one of those places where there has been a lot of talk about potential AI potential when it comes to healthcare, but it feels like there's just been no love for that sector, even with maybe some M&A rumors as well. How are you thinking about one of the most beaten down sectors there?
Well, Katie, with so many drugs are having trouble, quite late in clinical trials, healthcare is definitely, taking this moment to figure out, the direction. But AI component there is unbelievably important. When we think of the difference AI is going to make in generating the pool of patients for clinical trials, inefficiency of bringing the drugs to the market, inefficiency of analyzing the data, this is going to be the game changer for healthcare. So we absolutely are bullish on the sector in the long run, and we see a lot of buying opportunities. Investors always are looking for value, for productivity, for earnings. They're saying, where is the good sector where we can find some interesting buys? And healthcare is definitely the sector at the moment.
On today of all days, but any day, really, we are grateful to Katerina Simonetti of Morgan Stanley Private Wealth Management for joining us as we continue to follow this market sell-off. It continues, rattled by China's DeepSeek AI. We're going to speak with Manish Kabra, SocGen's lead U.S. equities and multi-asset strategist, get his perspective on the market effects of this. Coming up next, this is Bloomberg.
Welcome back to Open Interest. A quick check on stocks right now. We're going to start on the left side of your screen with NVIDIA, currently down by about 11% after that DeepSeek progress news. That is really weighing on your big benchmarks right now. The NASDAQ 100 off by about 2.8%. We had been down 4% in the pre-market, so those losses lessening right now. The same story is true in the S&P 500, currently off about 1.7%. That's pretty steep, but of course a lot can change between now and 4 p.m. We'll continue to track the progress there, but it's time now for top calls. Some of the analyst action in focus this morning, and first up, Ralph Lauren, no longer a buy over at Raymond James. The firm is cutting its rating on the high-end apparel retailer to a hold. Bloomberg Intelligence estimates that Trump's proposed 10% tariff on China could raise apparel prices by up to 2%. Next up, Barrick Gold getting a downgrade over at Bank of America. the firm is cutting its rating on the mining company to neutral, citing caution in its fourth quarter results. It reports earnings in 2 weeks. And we end with State Street, no longer a sell over at Wolfe Research. The firm is raising its rating to neutral after the bank reported earnings and sales that topped estimates earlier this month, David.
Well, getting back to the news of the morning, DeepSeek putting tech stocks on track for a $1.2 trillion loss today. For more, we're joined by Manish, Kabra, Societe Generale, lead U.S. equities and multi-asset strategist. Manish, thank you very much for being here. And I'm curious at this point, given what we have read, what we know, what more you need to know or learn about what this company has done and kind of the integrity and strength of this AI model? Where are we just kind of in identifying and understanding its capabilities right now?
Yeah, no, I think it's well, thanks for having me again. It's very clear, as in the two parts of the U.S. market. One, there's American exceptionalism, ingrained into NASDAQ, into tech sector. And then there's America First, which is all about, the reflationary policies, the new admin is proposing. So let's split this part. And I think that's the most crucial element at this point. Now, I would say NASDAQ, which has been the exceptional index, exceptional profit run, 20% annualized growth for 20 years. I think it's very obvious, market gets concerned with anything that hampers or even puts a smallest of the smallest question mark that there can be some form of profit hit. And, the current uncertainty I would flag, with, the DeepSeek is, I would say still a lot of unknowns, rather than known here. But one thing is very clear, market is concerned, where the profitability of these companies are going.
Well, let's wrap in the valuation conversation to what we're talking about, because valuations, it feels like we talk about high valuations all the time, but they don't matter until they do. And clearly today they matter. And against that backdrop, would you expect this to become a buy the dip sort of moment, or do you think that those valuation concerns will persist?
As in valuations, two elements. One, the U.S. bond market, 10-year bond yields, which I would say is one of the good things that has happened, or let's say blessing in disguise that has happened is, there's a bid on U.S. 10-year. And I think that gives a confirmation, at least we should not see valuation-related derating in this backdrop. The second part, which is all about the profits. And as in says something we have noted, this year, if we think this year was not about NASDAQ 100 profits anyway. So, the dollar has been a headwind, the growth rate has been slowing. And I think that profit growth rate driver, whenever the pace of profit growth slows down, I think that's where some of the valuation headwinds tend to happen. Now, I would say we don't have a tech hard landing view, but, one of the reasons why we have said, and arguably for last 7 months, is not to look for those parts of the market where rate of profits have been slowing. So, I would say valuation wouldn't matter, but they matter only in two scenarios. One, which currently is a good news that bonds have a bid. Second, on the profits, I would say outside tech, we are going to see double-digit profit growth in 2025. So you have a lot of places to buy in the index.
I know that we're 18 minutes into the U.S. equity trading session, but I want to meditate on the bond market a little bit, because we were talking about it, this bid that you're seeing in bonds as a result of this fear in the market right now about the U.S. lead in AI. Why does that translate into a 6 basis point bid into the 2-year Treasury yield? Why would this matter for the Fed?
But I would say at the moment it's a knee-jerk reaction that market has gone for safety and as in different parts of the bond market has got a bid. Now why it matters and, what has been the unknown is what is the true cost of AI product rollouts, which is, the question mark that DeepSeek has created. So but I would say the uncertainty, if we think the extent of spending that hyperscalers have been doing, if that should be reduced, if CapEx gets into focus, we should not see as much as inflationary dynamics that, the techs, the Max 7 CapEx cycle has created. So I think that's, that's one of the key drivers, which is, would AI be cheaper than what market has been expecting? If that's the case, I think the cost of productivity actually goes lower.
Manish, let me ask you just what this means for our kind of broader understanding of where we are in the development of AI. And a word that I keep seeing in writing about this is transparency. And I can use a different application of that just to sort of ask you about how much transparency we have into how these companies are iterating and growing and getting the kind of compute they need. Is this going to be a catalyst in kind of another way, where we're going to have to, there'll be a demand on these companies to sort of tell investors more about what they're doing and intend to do and how they intend to get there?
Yeah. As in first and foremost, the onus is on hyperscalers. The onus is on them to prove, one, they have the pricing power, and second, with DeepSeek, what's come into another equation is the capex projections. So if you have product pricing with the question on the capex projections, I would say the onus is on the hyperscalers to prove, at least in the upcoming earnings season.
Very curious what you're telling jittery clients of yours, should you have them, just about how they should be riding this wave. 1.2 trillion is a large number. What do you say to folks who are nervous at this point in time?
I would say a lot of folks are nervous. So, as in my key call is we all knew, and literally everyone, in the market, they're aware of the concentration risk. What not has been appreciated is, when rate of profits change, when the policy shifts in certain direction, positioning needs to be changed. And I think that positioning is all going towards S&P 500 on an equal weighted basis. Which I would say just 2 weeks ago had a big hit, like 7 to 8% hit because of the bond market. And the bond has been that rotation from NASDAQ to S&P 500 equal weighted, instead of just 1 or 2 trading days, I think it becomes for longer period. And and I think that that's our biggest call, which is American exceptionalism positioning, which everyone has. You move into America first positioning, and that American exceptionalism to America first literally translates into moving from NASDAQ into S&P 500 equal weighted.
And Manish, we have less than a minute left with you, but it's a fun detail that, of course, we're having this moment of panic, if you want to call it that, before big tech earnings. Did what we're talking about right now, this moment in time, change what you're going to be looking for when we get those reports and those earnings calls this week?
As in one, every company would get asked on tariffs. Every company would get asked on, the dollar movements. If you combine those things together, that would be a big focus. To what degree companies say they can, navigate or pass through the cost of the elements that can happen. But ultimately, we want confirmation that the GDP growth that we have seen, the U.S. consumer spending that we have seen, all of that needs to come into numbers. So I think the U.S. growth as a driver or economy as a driver needs to come into the profit cycle.
All right, Manish, really appreciate you joining us on such short notice on a black swan moment of sorts. That is Manish Kabra of SocGen. This is Bloomberg. All right, welcome back to Open Interest. We're taking a look at the stock market right now. Not quite at session lows. Some of those losses coming back. The S&P 500 currently down about 1.6%. That certainly isn't good, but it's not as bad as it was maybe 30 minutes ago. You take a look at the NASDAQ 100, still lower mightily on the day. The NASDAQ 100 off by about 2.7%. A lot of that pain showing up in big tech, as you can see in NVIDIA shares, currently off by about 11%. Just billions and billions of dollars being shed in market cap right now. But let's take a look at the VIX. I thought this was interesting. Of course, at the top of the show, we saw the VIX trading with a 21 handle, but now that quiescent VIX, David Gura, coming in below 19.
Love that word, love that adjective. Yeah, I mean, I think it's fascinating to watch this in the context of the larger AI story. I, an English major, kind of thinking about that in that kind of thematic way.
You've got a lot of words.
A lot of words and thinking of it in that kind of novelistic way. But I do think that the notion that we've been kind of seeing huge amounts of spending here on data centers, on compute, we're seeing it questioned today. Yeah. To what end, I don't know.
And we know it's going to be questioned on the round of earnings calls that we have coming up from a lot of those big tech names. We'll discuss all of that in the hour coming up with Anne Miletti. She is Allspring Investments Global Head of Equity. This is Bloomberg. All right, we're 30 minutes into this brutal trading day. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm David Gura. Matt Miller and Sonali Basak are off today. Coming up, risk-off sentiment sweeps across markets, stocks plunge as the buzz around Chinese AI startup DeepSeek shakes up Silicon Valley. The stakes are high for the Magnificent Seven, DeepSeek's lower-cost AI model, casting doubts on sky-high valuations. And beyond tech, investors also contending with Trump's latest trade moves and the next Fed decision due on Wednesday of this week.
All right, let's wrap all of that into these markets right now. The NASDAQ 100 trying to pare losses, being successful so far. The NASDAQ 100 currently up by about 2.6%. Again, for context, we had been lower by more than 4% pre-market, so those losses coming in here, but still pretty steep. The 10-year Treasury yield down by about 7 basis points. We had been looking at a 12 basis points drop in 10-year Treasury yields earlier this morning as investors look for havens here. Some of that is lessening as well as some of that volatility drains out of the equity market. The VIX currently trading with an 18 handle. That is elevated relative to recent history, but still below the 21 handle that we were boasting this morning. Meanwhile, we do have a little bit of economic news. New home sales coming in at 698,000 for December. That is above the survey and well above the prior reading. The survey had been for 675,000, but seeing these numbers come in just below 700,000. So new home sales coming in strong for the month of December. But let's go back to our top story, and that, of course, is big tech ahead of earnings. And let's take a look at least one group, how they're spending their money. Hedge funds turning cautious and selling Magnificent Seven stocks ahead of today's sell-off. For more, let's bring in Natalia Kunijevic.
Hi, Katie. So at least today, it really looks like a very, very smart move. We see that hedge funds have been selling Mag 7 stocks for 2 weeks in a row. Now, this chart really illustrates positioning and sentiment. Now, net exposure, net allocations to Mag 7 names across all across all stocks in the U.S. Is standing at 15%, and this is the lowest level since May 2023. We did see some deep buying after the U.S. presidential election, but overall, hedge funds are still really cautious on U.S. tech stocks.
I wonder about the narrowing and widening of skews, and if you see kind of similar cautious stance in the options market as well.
I think it's one of the biggest stories today because just yesterday we published a story about options market and how no one is really positioning to the downside. We checked positioning across all Mag 7 names, and the story here is that traders were much more cautious ahead of the previous earnings results. This time around, no one was buying downside protection. And on a bigger picture, so this chart is a good illustration. It shows put-to-call ratio here across U.S. stocks. It was hovering at multi-year lows just on Friday, but now today we see a pretty significant spike in that. And the biggest question, Katie and David, is this just an overreaction, or is it a bigger change in sentiment that could potentially last for longer?
Yeah, a lot of investors asking that question right now. Great setup, as always. That is Bloomberg's Natalia Kunijevic. Let's keep the conversation going with Anne Miletti. She is Allspring Global Investments Head of Equity. Great to have you on such a day in these markets and ahead of the heart of big tech earnings. And we know that expectations for big tech earnings growth had already been decelerating. And against that backdrop, how are you thinking about this news, DeepSeek, and the fear of lower cost AI models coming from China as it relates to portfolio setups?
Yeah, thanks for having me on today, Katie. Look, I think we have been trying to focus on the opportunities beyond concentration. That's been the area of focus in the outlook as we go into 2025. And I'm actually in Austin, Texas today as we launch our distribution summit. And again, that is a theme. We didn't know this news was going to happen over the weekend, but DeepSeek has been, investigated a lot by our growth teams in particular and our technology analysts. And, it was likely that something was going to come to cause more volatility in the space. It's too early to say how much of an impact this truly will have, but I think investors are going to be really looking carefully at CapEx spend, especially as these big cap technology companies start to report the quarters.
I'm curious just sort of how this colors earnings more broadly. So yes, this is the backdrop now as we get all of these reports, but to what you were just saying, sort of how does it shape the way we look at the results that we're going to get, listen to these executives as they talk to investors? What do you think it's kind of incumbent upon them to say in light of the news that's developed here overnight?
Yeah, David, it's a great question. I think, investors want to know that capital is being spent wisely. And for the most part, I think investors have been very comfortable with these large technology names because the CapEx spend that they have put to work has really increased revenue and in earnings growth. But with all of the investment dollars going into the AI space, they want to make sure that that continues, especially with the multiples these stocks now have. And so the focus will be on capital allocation and what the CEOs and CFOs are saying about their investments in this space and how it relates to their competition. I think those are going to be some of the key things that the investors will be watching and waiting for. Look, though, I would say this volatility this morning is not surprising. On top of the concentration you see in the passive benchmarks, you have some levered ETFs out there as well, both in the semiconductor space that are increasing or exasperating the amount of volatility we're seeing here this morning.
Well, let's talk about that a little bit more. Of course, I live in the ETF space, ETF IQ coming up at noon today. But talk to me about that, because we have seen, especially retail investors, really gobbling up these leveraged tech ETFs, both on an index level and a single stock level. How are you thinking about that as a portfolio manager who maybe doesn't play in some of that silly stuff?
Yeah, look, we're just launching active ETFs at Allspring, and it's an exciting time. I know it's a good choice for investors as I think about protecting on the tax front. But I think when you invest in any type of vehicle, you have to understand the risk versus reward. And I think the concentration risk that we've seen in many of these ETFs has been what has been concerning to us. And it does have implications across all the markets and across any type of investment you have now. So we're seeing the repercussions of that today, Katie. But look, I think we have a little bit more time to see how this plays out.
Yeah, if you're looking for fun, David Gura, take a look at NVDL. That is the Granite Shares 2 times long NVIDIA ETF. It's down just 25% at the moment.
Can I ask you about something else that happened this weekend? And so before the football game, I think that the catalyst everyone was looking at was what President Trump was saying about Colombia and this threat of imposing tariffs on a country that wasn't even in the conversation maybe 24 hours before that happened. And I think that it's giving us a taste for sort of the mercurial nature of this president, this administration, and how that dovetails with markets. Let me venture just to ask sort of what you learned from the, I guess, 8 or 9 hours that we went through yesterday when we saw markets kind of reacting to what this president threatened and then took away.
Yeah, David, I think the one thing that we as investors have to understand is we tend to bracket things in silos. So when we talk about tariffs, we talk about that separately from interest rates, separately from immigration, separately from trade policy, all of those things. And as you see, and as we saw kind of even in Trump's last term, a lot of these things are, get conflated together. He likes to make deals, not within silos, but across all different types of metrics. And so immigration, inflation, tariffs, all of those things get rolled together and things can move very, very quickly. So although most first-year presidential terms are positive for markets, and we believe that this one will be too, most administrations don't move this quickly. And so there's less volatility in year one. We actually think there will be more volatility because things are moving very quickly and they are somewhat unpredictable. But I think there's a little bit more discipline behind the actions than kind of some of the actual negotiation that gets thrown out day one.
That's certainly part of the hope for the bull case. But again, let's go into your shoes and how you think about this as a portfolio manager. This noise, it's unclear, of course, what is a negotiating tactic, what will become actual policy. Do you look through it, or how do you hedge for that uncertainty?
Yeah, it's a great question, Katie. And look, equity managers are always kind of balancing risk versus reward. And so you're looking at company fundamentals. And I think that's the most important thing that often gets ignored in these very micro or macro driven markets. You have to make sure that you're invested in companies that have the ability to be flexible, to move very, very quickly, and have the balance sheets to be able to do that. And honestly, the management teams with experience to be able to do that as well. So we tend to focus on the micro, on the bottom up, and making sure that we try to stay invested in companies that can sustain whatever change happens over a longer period of time.
And we've talked a lot about technology here, AI in particular. Let me kind of pull back and ask you sort of where you are interested beyond that, other sectors that you think that are more promising as we talk about kind of broadening out, looking for more breadth. Where do you see promise beyond big tech?
Yeah, it's a great question. And I think, look, we believe that AI is real. We believe this innovation cycle is real and long lasting, but we do think it's bigger and broader than just technology. It will spread, it will produce productivity improvements in a lot of different areas. One area that stands out to me is healthcare. It's been an area that has been under a lot of pressure, both through underutilization during COVID and also due to some of the pressures that the GLP-1 drugs have brought to it. But if you think about AI and the productivity improvements that could come to the healthcare sector, it's pretty exciting, and some of the names are pretty attractive valuations. So that's where I see a lot of our equity teams looking for more names. I would say even more broadly than that, if you look down cap, so away from just the mega cap trends, in the small and mid cap space, there's just been a lot of companies, regardless of sector, that have been ignored because of this focus on just such a concentrated few names in the market.
Ann Miletti in Texas today of Allspring, joining us on all of this market news. Ann, thank you very much. Appreciate the time. And coming up, Trump's DeepSeek problem. We'll talk about what the AI reckoning means for Donald Trump and the White House and Wall Street. This is Bloomberg. Now to high interest, a look at what's making headlines around the world. Israel and Lebanon agreed to extend their ceasefire until February the 18th to give Israeli troops more time to withdraw. The ceasefire deal between Israel and Hamas still holds while a dispute over a hostage is resolved. Talks on the return of Lebanese prisoners and the release of more hostages are set to begin. Elon Musk's Department of Government Efficiency is officially online. The government is currently recruiting full-time software engineers and other tech staffers. Applicants must be U.S. citizens. And apart from a resume and a commitment to working in the office, they are asked to list up to 3 items, quote, showing exceptional ability. And the Kansas City Chiefs and the Philadelphia Eagles will meet in New Orleans for Super Bowl 59. It is a rematch of 2023's big game that will determine if the Chiefs can achieve the first ever Super Bowl three-peat. The Chiefs once again beat the Buffalo Bills at Arrowhead Stadium, becoming the first team to advance the Super Bowl 5 times in 6 years. Let's turn back to the story of the day. The Chinese AI startup DeepSeek sparking a $1 trillion rout in U.S. technology stocks as investors question bloated valuations for some of America's biggest companies. It makes some investors nostalgic for the days when the U.S. TikTok ban was the biggest drama in tech. Here to talk about how President Trump may handle the DeepSeek conundrum is Bloomberg's Michael Shepard, who is in San Francisco with us today. And Mike, I can't help but think back on what we saw unfold in the Oval Office just a few days, not even a week ago. President Trump there with many titans of tech talking about a big investment in AI computing. How do we reconcile that with what we've seen here over the last few hours?
Well, it's hard to reconcile that, David, and it also raises questions about how President Donald Trump will respond. He doesn't like surprises, as we saw over the weekend with the Colombia tariffs, and I'm sure you'll want to talk about that too. But on DeepSeek, it was a rude surprise, especially for the administration, which has been pushing AI dominance by the United States as one of its top priorities. We not only saw that in the event where OpenAI, SoftBank, and Oracle all stood beside Donald Trump announcing their plans for $100 billion in investment to start to build data centers in Texas and elsewhere, going up to $500 billion if needed. But now seeing that a Chinese startup can do it on the cheap and catch up to U.S. technology, perhaps, it throws a lot of that into question.
Yeah, hard to believe that announcement of that $100 billion planned spend was less than a week ago. Let's talk about how this wraps into the fact that the U.S. limited chip exports to China. The goal there was to slow China's AI progress. And some might make the argument that this is a surprise of the U.S.'s own design, that, you know, you had these Chinese engineers then have to be forced to go out and figure out how to do it on the cheap with their own technology.
And that's a great question, Katie, because, you know, those chip export controls were unveiled slowly and gradually by the Biden administration, really culminating in the announcement that they've made with a week left in office of a three-tiered system of access to AI technology with origins in the U.S. And the idea was to keep adversaries like China and Russia and others from obtaining the same level of sophistication with AI. And yet it seems that the earlier restrictions and perhaps the newer ones may have been too late, and they may not also answer the question that innovators are going to innovate, and they're going to try to work their way around a problem. It's also unclear exactly how DeepSeek and its engineers did it, if they use U.S. origin technology. So there is still a lot we need to learn about what just happened, and that may inform also how the U.S. ultimately responds.
Mike, you're in San Francisco to anchor Bloomberg Tech, but let me ask you to think about what might be happening in D.C. today, the kind of protectionist conversation I imagine that's happening in the halls among many Republicans who are worried here about these advancements that the Chinese have made. I made that joking reference to the TikTok story being the biggest thing in tech just a few days ago. How do you see the policy machine, that apparatus, responding to the news that we've gotten here? This is a seismic white paper giving us some insight here into what this company has developed. What do you anticipate the kind of policy response, the rhetoric's going to be surrounding this in Washington?
Well, we can expect a fair amount of heated rhetoric, to be honest, David, and that is because hawkish stances against China are really in vogue these days in the nation's capital, and especially when it comes to sensitive technology that could have not only commercial but potentially military applications. And we've seen this come up from time to time, you know, in different moments where China's made a breakthrough. We can think back to Huawei's Mate 60 smartphone about a year and a half ago. That prompted a pretty sharp response from the Biden administration. Remember, it was unveiled when then Commerce Secretary Gina Raimondo was visiting the region. And that was seen as a way of saying to the U.S., look, we can innovate too. Now, ultimately, the Mate 60 may not have had all of the functionality that was promised and heralded at that moment. But nonetheless, it signals this real clash over tech between the two economies. And for members of Congress and for the administration, it will prompt a pretty hawkish response. Now, what they actually decide to do, that'll take a little bit more time to deliberate.
We have about a minute left with you, and when we're talking about the potential response from the Trump administration, talk to us about the significance that we're talking about open source here. How do you ban something that's open source?
Well, it's really difficult, and that is one of the questions that is going to have to be addressed by the administration, in that if something is open sourced, it's much more transparent, and it's also much easier to, you know, maybe copy and develop in a way. And so the administration is going to have to think about, okay, what sort of model do we want to see promoted here? That's been part of the debate in AI regulation and oversight for years. Now, of course, this administration is trying to take a much more lighter touch approach when it comes to regulation. So this is a key part of the debate that we're going to see unfold, Katie.
All right, Bloomberg's Michael Shepard in San Francisco, joining a very busy BTech today, I'm sure. And David Gurr, we didn't even get to Colombia.
We didn't talk about Colombia. I went out yesterday and bought some coffee beans, thinking prices might go up. But again, it was like 9 hours from start to finish this this tragedy
well,
surrounding
still,
tariffs in
you're
Colombia.
part of the problem because coffee prices have been sky high. Maybe we'll get to that next. This is Bloomberg. Welcome back to Open Interest. Let's get a check on these markets. The S&P 500 down by about 1.6%. What's interesting is that you see the S&P 500, the NASDAQ 100 off their session lows, even as losses in NVIDIA start to deepen here. You can see NVIDIA shares down by, if you round that up, we're at 14%. So just a brutal day for NVIDIA coming out of that DeepSeek AI panic. Agita, I think we were debating what exactly to
I'm
call it.
advocating for that. I'd like to see it in a banner by the end of the show.
Maybe some nausea. What's amazing to me, David Gura, is that you take a look at trading volume right now. We are 107% the 20-day average for the S&P 500. So you might have thought this was going to be kind of a quiet show, drum beating to earnings, drum beating to the Fed. That's not what you got.
I was naive in thinking that might be the case. And as is the case with a big kind of rolling news story like this, interesting to see sort of all the different veins that it trickles into, and one of which is energy.
Yeah.
And we've seen that throughout the morning as well. Of course, the promise of AI requires so much power for all of the compute.
Exactly.
And we've seen sizable drops across the energy sector, including uranium stocks. They're down today as well, amidst this promise that there'd be kind of a new nuclear renaissance to power all these data centers.
That's the thing. It's not concentrated to big tech. That AI trade is spread out to other parts of the market as well. And that's why the entire market is down today. But coming up, we're going to talk about the private airline industry off to a strong start this year. That conversation up next. This is Bloomberg. All right, welcome back to Open Interest. Taking a look at these markets, still not too pretty, but losses lessening right now for the S&P 500, for the NASDAQ 100. The S&P 500 down about 1.5%. Big tech still leading those moves to the downside here. The NASDAQ 100 off about 2.5%. NVIDIA losses deepening right now. Let's try to make sense of it all with Bloomberg's Bailey Lipschultz, because what's fascinating to me is that you have Meta turning green right now. Meta, of course, was in the penalty box this morning because they had that big CapEx announcement last week. So Meta going green, though, but NVIDIA still moving lower and lower.
It's a lot of the exposure. And also, Katie, just to keep put into context, part of the run-up. So one thing to keep in mind, Meta has been the best performer of the Mag 7 so far this year, up about 11%. But when you look at where we've been at over the last 2 years, NVIDIA has been absolutely crushing some of those other big technology companies. So when you see investors running for the exits, they're going to hit the first companies that could be an unknown. So when you look at what this could mean from China, are they actually using NVIDIA chips? Are they using other technologies? That hits the fundamental bull thesis for NVIDIA, whereas Meta, if they are investing in data centers, they are writing some of those big checks, that still seems to be a lot of open space for the company to kind of skate to, because fundamentally, looking at their business proposition is very different from NVIDIA and how some of these AI models could actually impact their ability to generate revenue and profits.
Incredibly important week for a number of these big tech companies, and we focused on a number of them, but kind of stepping back, other companies reporting. SoFi reported today. Its shares down. I gather their guidance was not what analysts were expecting it would be.
Yeah, fourth quarter was pretty strong, but when you look at what they talk about for 1Q, for 2025, that adjusted EBITDA forecast falling below what Wall Street was looking for. Also, we'll keep in mind, this has been a stock that has been on a tear for the last few months, so maybe getting caught up and investors wanting to sell some of those winners. But again, down about 9.5% right now. Biggest drop really only in a few weeks, though. So when you're putting it kind of in the whole perspective, looking at SoFi's business, it does seem like a sharp sell-off in terms of guidance, but it still does seem to be maybe getting caught up in that risk-off mentality.
Should we end on some good news?
Positive news, positive moves.
Yeah, tell me about AT&T just flying today.
Well, it actually has really accelerated those gains. Was up about 2% earlier, now up more than 6%, beating expectations, adding wireless subscribers, but also, again, guys, on the flip side of this, flight to safety. If you're a portfolio manager and you have to be exposed to equities and you kind of manage a broader book, maybe some of those stocks that pay dividends, maybe there's some of those companies, again, that have that earnings hurdle out of the way. So investors flocking to AT&T, flocking to some of those healthcare and consumer staples names, again, just given some of the broader trends we're seeing. But all things considered, starting off on a good foot for the telecommunications sector.
Yeah, big time. Bailey Lipschultz, just the best of the best. We'll see you again soon. That is Bailey Lipschultz. Let's take another quick peek at Meta, because quite a turnaround that we're seeing in Meta. One of the names that was being sold in the pre-market now managing to go green just slightly, only 0.4%. But in this market, that is certainly impressive. We'll continue to keep an eye on those shares. But let's pivot now and take a look at the private airline industry, because Flexjet is ready to add an additional 39 aircrafts this year to its fleet. Joining us now is Mike Silvestro. He is Flexjet co-CEO. It's great to have you with us, Mike. And let's just talk about how the business actually works. My understanding is that you own the planes, but then me or David could go out and get a fractional share of one.
Well, actually, Katie, thank you for having me first. It's a little bit of both. So the fractional industry, as customers of ours, as owners, you really own an undivided interest of a particular aircraft, and you can depreciate it, you can finance it if you want. And then part of the magic of the fractional environment is there's a master interchange agreement between all of the customers in the model, which allows the operational model to exist where we can pick you up really anywhere in the world within a moment's notice.
Mike, help me understand the customer profile. So I know it's tough to say who the average customer is, but give me some sense of who is working with you. And I'm also curious how long a customer sticks with the company.
Well, our retention rates, David, are phenomenal. We have over 60% of our customers that have been with us for over 10 years and another 40% that is with us for over 15 years. So the profile is really a combination of a couple different people. First, it's the ultra high net worth individuals, and they're using it for a combination of both business and personal. And we've also seen a great trend where corporate flight departments are using fractional Flexjet with for supplemental lift. So they're going to still have their corporate fleets, but perhaps maybe instead of adding that 5th or 6th aircraft in their fleet, they're choosing to supplement what they have with an additional share with us.
And I'm curious about how you source your planes. Of course, we've all been paying attention to Boeing over the past year and a half, really struggling to actually get airplanes out the door. Which models do you use?
Yeah, we don't buy any airplanes from Boeing. Our three major manufacturers are Embraer, Bombardier, and Gulfstream. And there's really only 5 significant manufacturers for private jets around the world, and we secure and buy airplanes from 3 of them.
We hear so much about a pilot shortage, certainly in commercial aviation, and I wonder sort of how you're navigating that, the fact that there aren't enough people to fly planes. Is it something that you're focused on? How are you making sure that when a pilot's deciding where to go, you're a viable option for him or her?
Yeah, it's a great question. Well, you know, pilots as well as maintenance technicians really are at a premium. But our pilot workforce is over 1,400 strong today. And I'll tell you, that's one of the best things about Flexjet. We have a non-union workforce, and we have a wonderful culture. We actually did something very counterintuitive a couple years ago when we looked at our retention rates, and we noticed that pilots that were with us about 2 years were leaving us to go to the airlines, primarily because we have a very trusting culture. We don't have training contracts, so we were being negatively profiled. So what we did, most people would think, well, let's lower our minimums. We raised ours to a minimum of 3,000 hours, a total time for you to be a Flexjet pilot at a minimum. And we've actually seen our retention rates skyrocket. So we've attracted really quality pilots, both from a safety standpoint and those that fit our familial culture.
So skirting some of the pressures of that pilot shortage that David mentions, I want to talk about the competitive landscape a little bit, because you have commercial, of course, and you have private, and then you have something in the middle, such as the JSX model, where it's regional planes that fly on limited routes, and they're more expensive than commercial, but they're certainly less than, of course, chartering a private jet. What does it look like from your point of view? And do you think that models such as JXS pose a threat to yours?
Boy, I'm happy when anybody flies privately, Katie. So I think it's a great way to get people moving from commercial. It's kind of like it's a half a step. But our business was up 14% year over year. Our book of business, our hours under management, is up over 60% in the last 5 years. So I think it's a natural evolution process, and we would almost treat it as I welcome anybody that would enjoy flying privately. So to kind of move from commercial to this hybrid all the way up to something that they would come with Flexjet.
Mike, we can't have a CEO on the show without asking him or her about the regulatory landscape and the change in administration. I wonder how you're kind of watching all of that unfold. The nominee to be the next transportation secretary certainly has experience working with airlines after he got out of Congress. What are you watching for? What does that landscape look like to you? How do you see things changing here under a Trump administration?
Yeah, wonderful question. We're celebrating our 30th anniversary this year, David. So I would tell you that we've navigated multiple administrations and certainly multiple environments financially that affect our business. So we're open. I don't expect anything that would provide significant headwinds with us. We have a great relationship with our local FAA office, and so whatever comes down the pike, we want to ensure, most importantly, that we're in a safe environment for our customers.
All right, Mike, great to get some time with you. That, of course, is Mike Silvestro. He is the co-CEO of Flexjet. Meanwhile, let's get back to these markets right now. An interesting move underway. We're still lower and then some on the session, but we are getting some headlines right now. And this coming from DeepSeek saying that it's restricting registration to China mobile phone numbers. This is interesting, David Gura, because one of the questions out there is whether the U.S. and the West broadly is going to be able to use DeepSeek. And maybe this headline would suggest that, at least for right now, the answer is no. Maybe that's why you're seeing some of the pressure come off these names.
Certainly something I want to talk about with our next guest, just the regulatory overlay here and sort of how that affects it. And if you think about the way that this kind of came to light over the course of the weekend was how quickly this app rose through the Apple App Store. So certainly will be fascinating to keep watching.
You've got it downloaded. I do too, apparently.
You do?
I don't. Well, I mean, just
I'm a little wary. I feel wary.
Purposes.
Yeah.
Shouldn't we do some on-the-ground reporting?
Stay tuned. Maybe we will during the break.
Well, coming up, as David mentioned, Pierre Ferragu. He is New Street Research, head of global technology infrastructure. He joins us next. This is Bloomberg. All right, let's turn back to these markets because that big tech sell-off, it's continuing, but pairing a little bit after DeepSeek's AI charge. Let's break it down with Pierre Ferragu. He is head of global technology infrastructure over at New Street Research, joining us on short notice, and we appreciate you for that. Let's start with the latest because DeepSeek just updated its status page and said that registration with a mainland China mobile phone number is supported. That is the only registration supported at this moment. What do you make of that? Is that about capacity, or what do you make of that headline?
Well, that headline coming at any other moment than this morning could have been interpreted in different ways. One part could be geopolitical, China trying to restrict their leading edge technology, avoiding that the West can get too much access to it and learn too much from using it or benefit too much from using it. But given that it's happening this morning, it's most likely a capacity issue. Remember that using a model like V3, like R1, is extremely compute intensive. And even if it's 10 to 20% cheaper and probably 10 to 20, not percent, but times, 10 to 20 times cheaper and 10 to 20 times less compute intensive than an OpenAI leading model, it's still very, very heavily compute intensive. And your data center fills up very, very fast if everybody on Earth wants to try it.
Pierre, I think a lot of us are trying to familiarize ourselves with DeepSeek, Googling it. I learned that its motto is into the unknown, which of course reminded me of the Frozen song, and I may have sung it during the break just a little bit while Katie was here.
It was gorgeous.
Yeah. I am curious about what you're saying about capacity and sort of the questions that you have about this company and its capacity to grow beyond China in light of what we know right now. What are you watching for? What do you want to hear from this company as you try to assess how big a threat it might be to the kind of larger AI names we've been talking about for many months?
Yeah, so I think the spin DeepSeek gave to their product announcement was very interesting. So they came up with products that are 10 to 20 times cheaper than what the leading models from OpenAI can offer for a similar performance. Now you have to take a step back and understand what's the difference between an OpenAI and DeepSeek. OpenAI is going to the frontier, so putting maximum scale into their frontier models in order to see emerging features and try new things. So when you do that, you don't look at compute. You just go as big as you can. And then once you have something interesting like GPT-4, like GPT-3, in their time, like O1, then you work out how you can simplify a distill. We call that distilling the model, like pruning the model to make it more efficient. DeepSeek is on a completely different, other, like the other end of the spectrum. They're actually like a fast follower. So what they do is they try to match the performance of a frontier player like OpenAI, focusing on efficiency. How can we do as well as OpenAI with like a more efficient approach? And they basically came out with something that is about in line with GPT-4, but that comes, that is released like about a year later or 9 months later, and they have this performance improvement. And so they are doing very, very well at that. They're very good at improving the efficiency of models. But it's not like a direct threat to OpenAI, because remember that OpenAI internally is also very fast improving the performance, like the efficiency of the models they release.
Helpful background there, because I think a lot of people like David were just Googling what DeepSeek is and trying to come up to speed. And with that in mind, give us the overall context here. You went into some of it, but just simply, would you say this is a game changer? You certainly saw that panic in the pre-market, but lessening a little bit right now, Pierre.
Yes, from my viewpoint, and amongst all the people I speak to on a daily basis in the AI community, the generative AI community, it's absolutely not like a game changer. Like Mistral, the French startup that made the headline a bit more than a year ago, was exactly on the same game. They managed to replicate the performance of the leading OpenAI of the time, GPT 3.5, with a similar 10 to 20 time, efficiency improvement with very similar techniques. So the techniques are about creating like a collection of experts. So instead of having a single large model, you use several smaller models, each trained on a different part of your data. So these things make training much more efficient, and inference as well. And so DeepSeek is replicating really from a technological standpoint what Mistral did a bit more than a year ago. Where they've been very different, Mistral came out and priced their service at a 30% discount to OpenAI, which was like a bad business decision. I call that like a French, business decision. And DeepSeek has been much more Chinese in their business approach, much more aggressive. They're like, well, we are 10 times cheaper to run, so we are going to price it 10 times lower. And that's the reason why the market is freaking out at the moment. But I think it's just a learning curve. People need to understand that this is essentially the way AI works. You go for very, very large scale. You discover new things, you're on the frontier, and then you come back and you find ways to improve it and to make it more efficient so that it becomes economically viable. But to me, that's business as usual.
Let me end there with a question just about the optimism that we've heard, that this is kind of, in a way, a kumbaya moment. I can imagine Sam Altman kind of holding hands with Mark Zuckerberg and whoever's responsible here for this company, working to kind of advance generative AI, to sort of mimic or model or replicate, as you've said, what they've seen here. How likely is that to happen? I guess it's painting a picture here that seems much less competitive than I think I would have assumed.
Yes, I think we will continue to see a very similar model where players who have a lot of resources are going to go for scale. You know that they are now all deploying like data centers that will contain like 1 million GPUs or ASICs, like crazy scale. They're going to really drive innovation and see like new capabilities emerge. Look at the O3 model of OpenAI that is like 10,000 times more compute intensive than O1, but that is almost as clever as a STEM grad student. And then we will see players like DeepSeek and others who cannot afford these very large models. Like especially in China, it's very difficult to source the chips required to do that. Who are going to really work on making AI more affordable. And at the end of the day, David, we need both. We need people for the next frontier, and we need people who work on making it more affordable so that we can deploy it.
All right, Pierre, got to leave it there. So appreciate your perspective on today of all days. That is Pierre Ferragu of New Street Research. And you can follow along on our live blog for more coverage on DeepSeek and this sell-off by typing TLIV GO on your terminal. This is Bloomberg.
The Fed Reserve starts its first meeting of 2025 tomorrow with the rate decision coming on Wednesday. Here with a preview is Michael McKee, of course, Bloomberg's chief international economics and policy correspondent. Mike, give us the lay of the land here going into this meeting. I have a couple questions I'd love to ask you just about the political pressure we've seen teased by this president in recent days. But what can we expect when the meeting gets underway tomorrow?
Well, the Fed's looking at the overall economy, and the latest numbers we got on new home sales, not bad, but not great, down for the year 2024, and builders are still cutting back. And that's not something the Fed wants to see, but it's not something that they can do a whole lot about unless they start cutting interest rates. And that's not likely. Later this week, we get GDP, we get income spending, PCE, and we'll have a better idea of what the economy looks like for the Fed. The problem is it comes after the Fed's meeting. So at this point, we're going to have to go with what they've told us up to this point, which is they're not going to make any moves. And so we have to rely on what Jay Powell says. And what is Jay Powell going to want to say? Not a whole lot. So I don't think, I was telling somebody this morning, I think this could be the most easily forgotten Fed meeting in a while, because right afterwards we get this data and then we get that February 1st tariff deadline, whether it comes or goes or not. There's just a lot out there for the markets that they have to think about besides the Fed doing nothing.
Yeah, well, right now the market is thinking solely about AI, but I want to talk a little bit more directly about political pressure, because it was at Davos, correct, that Donald Trump said he was going to demand lower interest rates. What do you think the conversation behind closed doors is going to sound like tomorrow and on Wednesday?
Well, it's going to be interesting to see what the over-under is on how long it takes Trump to tweet after the Fed decision comes out.
I think he's going to be tweeting during it, hopefully.
You know, I'm not even sure. I'm not even sure he's going to be paying as much attention to that, given everything else that's going on. If this were in isolation, I could see that more. But it's certainly possible, and the Fed is just going to ignore it. And you know Jay Powell's going to be asked about it, and he's going to say, we do what is best for the economy. We're not going to worry about the politics of all of this. So I'm not sure it gets us anywhere other than gives us something to talk about.
That's certainly the case, I think, with the rhetoric that'll be kind of lobbed at him. But when it comes to what may be policy here in the coming weeks, the tariffs policy that you mentioned on February the 1st and beyond that, is this a Fed that is still content to see through all of that, as they've put it?
I think it's a Fed that doesn't know what it's going to do, and it's going to be watching it. The way this is developing, it just prolongs the uncertainty, because the Fed is waiting to see what the president is going to do that could then have an impact on the economy, and they don't know. You got this deadline on the 1st, but you've also got an April 1st deadline for tariffs as well. So what do? You stand back, you wait, you watch. That makes perfect sense to people in the markets, to all of us, maybe not to the president, but you look at what Fed funds futures are saying, and we've sort of gone round trip almost back to where we were in December before the Fed meeting, where you've got the markets thinking we could get 2 cuts this year. Way out there, but we could. Some people say maybe we get a rate increase. We just don't know.
We just don't know. Maybe we'll get some more clarity.
This is why you have to keep watching open interest every day, so you can keep up with this.
We should just end the show there. Mike McKee, thank you so much. We'll see you again probably tomorrow. Let's get a quick check on these markets. Of course, we've been tracking that sell-off. It's still underway, but to a lesser degree. The S&P 500 currently off by about 1.5%. The NASDAQ 100 lower by about 2.5%. Some of your names are going green. The Metas, the Apples of the world, but NVIDIA losses deepening right now, down about 13%. That does it for today on Open Interest. Coming up tomorrow, we'll speak to Emily Bowersock-Hill of Bowersock Capital and Grace Peters of JPMorgan. This is Bloomberg.